Morning, traders. This is Paul with Gamma Edge. Excuse me. Today is Wednesday, the 6th of July. Let's get started. Pause your players. Read this. It's important to you. It's important to us. If you agree, go ahead and hit play. The market model is starting to turn bullish. And starting up here in the upper right, I will say the breadth model is extremely poor. You can see the 52-week new lows still outpacing, although later in the day it stabilized as we got buying occurring later in the day. The second trace is the filtered cumulative tick. This shows the presence of sweep orders not clearing at the exchanges. The rate is 1,000 ticks per minute, and you can see we had a linear up into the close. That's always a bullish signal, and we're very, very positive on that. For the day, net buying, second day in a row where we have the cumulative tick actually closing a fairly significant level up, which again is to be considered bullish. Short term, of course, time frame matters. When we take a look here at the bottom, we're still in an overall long-term downtrend, but we do have a crossing down here of the USC. This is the US composite tick signal, and when the instantaneous cumulative tick shown here in white crosses into what we call the ribbon or the historical moving averages, we have extensively back tested this, and this is a good early warning indicator to start looking at the longs. Taking a look here across the board at different types of cumulative ticks. Here we have the ARCX, the SPX tick, the NAS tick, and then the Russell 2000 tick. You can see they all provided a confirmation, which means the slopes are starting to turn up, or we're basically above that lower moving average. Any of these are valid signals. We have extensively tested the ARCX, and you can see that right now we're looking at across the board a good confirmation. Questions come up about how is there an edge here, and the answer is yes. This top graph here shows final equity 50, which on a Monte Carlo is the average by definition, and maximum drawdown 50th percentile. So basically we're doing a risk adjusted metric here for a number of days held. If the trend continues, this is not predictive. This is basically saying if we get a sustained trend, the overall portfolio risk-adjusted levels are very, very good. And this is the third most profitable long entry signal that we've got in our arsenal. The third goes to the second, goes to the first, because this is an earlier warning system and is more prone to failure. So study this graph, make sure you understand it, ask questions if you don't. Down here is basically overall total portfolio final gain. And this here is the maximum drawdown levels. And one of the key things that your eye will see is that as the trend is captured, we actually stabilize in overall maximum drawdown. This is because as we get into these longer term trends that go to the upside, volatility becomes dampened due to basically dealer response, where the dealers are buying the dips. We're not in that condition right now. So we've got some time to get up there. It's going to take a little bit of work. You can see that we actually don't have unity here on our profit factor until we get out past 5 or 6 days. So we're looking to get out beyond these initial signals, get out into next week and see that they continue. We could have a failure in here and we'll know it. Switching over now to the index conditions, we are seeing short-term put gamma come out of the complex over here on the SPX. Not seeing a corresponding increase in calls. That is I don't want to say warning signal, but it's not the greatest of structures. Over here on the SPY, we actually had puts going in, and we've got some calls going in. Again, these are short-term gamma levels, so these are near-term expiry, near-term dated structures, and they're not confirming. Over here on the Qs, we actually had short-term gamma coming out on the put side. We had short-term gamma going in on the long side, on the call side. which the Qs have been bucking the trend and have been fairly strong in recent history. On the IWM side, virtually no demand for upside calls. You can see there's virtually nothing there. We did have some monetization or some puts coming out, but no corresponding call side. Not a strong structure across the board. Just be aware that these cumulative tick signals are prone to failure in this type environment, and just be aware of it. Volatility, we are seeing puts continue to increase on the downside. This means folks are looking to participate in any move or any reduction in volatility. That's a good thing. On the flip side of this, though, we are seeing calls going in a fairly substantial, you can see this is the day-over-day change. You can see a lot of calls going in when we look at the magnitudes here. Always check the scales. You can see that folks are banking on volatility late in the year, and we're starting to see that type of behavior. And you can see the distribution of where things are going. When we look at the expiries, I've blocked off where we are and where the zeros are. Here's where we are and where the zero is, etc. Here's where we are, here's where the zero is. And the key thing to be aware of is that for the SPX and the SPY, we're very, very close to these no pressure zones. For the Qs, if we can continue to advance, that's probably a good thing. Note that for the expiry today, though, 285 is kind of the line in the sand. If we get below that, basically we're going to be kind of in the middle. No pressure to move one way or the other. Some people like to call it the max pain level. I abhor that term, but you get the idea. Here on IWM, the upper level is 174. If we do break above that 174 level, you could see some monetization. These are equity settled, meaning the SPY, the Qs, and IWM. We have a cash settled over here in the SPX, and not as much pressure to settle that. Also look at the magnitudes. The SPY, by and large, is the largest magnitude today. The SPX, which is a larger instrument in general, is actually nothing compared to the SPY. So we're not expecting a lot of pressure here today. Taking a look at the index option, when we take a look at overnight OI changes, here's basically what we're seeing now. Look at the scale. You've got to look at the scales in detail here. So this white line that you see here and the white line you see here, they're not the same. So you have actually more puts going in than calls on the SPX, on the SPY. And if you take a look over here, the scales are the same, but you can see kind of balanced on the Qs, and here on IWM, we're actually seeing, again, if you take a look at the scales, we're seeing more on the put side than we are on the call side. Distributions, again, as shown down here. Taking a look at the zeros, it's important to note that when we see a down one day, as noted here, we're in this noisy period where we're switching from one day up in the zeros to one day down. So no broad movements in the zeros across the combo complex, the AM settled complex, or the PM settled complex. So these zeros are holding steady. They're not coming down towards spot, and they're not moving upwards. So that is, I don't want to say it's a resistance or anything, it's actually lack of pressure. The deeper spot gets into these, the less dealer response will be in these areas because their gamma exposure and their delta exposures are zeroing out. So just be aware of that. We're still below the primary, what I call, grouping or mass. We're just going to have to wait and see. I'm not enthusiastically bullish with this setup. I think it's important to realize that we could reject in this area and still push down towards a negative gamma. Taking a look at the 0 DTE, net positive gamma, fairly strong. The range is shown by the blue lines, net negative gamma here. We closed here, very clean transition at 3,800, 3,805. I don't expect we're going to push any higher than 3,900 today. Above that, there's no pressure from the 0 DTE, excuse me. 3750 in the 0 DTE and below, again, no pressure, so I think the valid range that we could play 3750 to 3900. We got a lot to plow through up here, and you can see 3875 is the predominant expiry for gamma today on the positive side. 37.50 on the low side. Note that the dominant call expiry is all the way up here at 4,000, slowly whittling away at 4,000, but not enough to do anything. Taking a look at the combo is comprised of the AM settled and the PM settled. We're getting less negative. It's still very negative. This is a big negative number by anyone's measure, but we're getting less negative, and that's usually indicative of calls being added, puts being closed. Now, all of that being said, we've still got a long ways to go. Here up at circle 2, which is the 4,000, 4,005 strike, we've got a wall that we are not going to be able to get over at any time soon. This is POI, the put open interest, call open interest. We've got huge levels in notional delta exposure up here. We're not getting up over that anytime soon. I do note at circle 3, we got 26 billion, 27 billion in delta notional. We did blow through yesterday about 16 billion. As we crossed over 3,800 yesterday, and so we can move. 16 is a number that we played around yesterday. So 26, a little bit larger. The dealers need to come up and underwrite this type of and hedge out this type of delta notional. So it's important to understand when you see a sea of red like this with these big numbers. It's not saying that they can't do it. It's just that they've got to be very creative in how they're leveraging this out with futures and other correlated instruments. It's a lot of work. So just be aware that these levels become impediments to both falling as well as to rising. 3,800 down here at circle 4. Again, fairly large gamma and delta notionals. You can see the quarter levels here as we drop on down to 3,700. If we do lose 3,800, it's going to be fairly easy to drop, I think. So we may test this 3,750 again with a final test to 3,700. Below 3,700, you'll see on the next screen that is just probably not realistic in the short term. Just draw your eye over here just so everyone's watching this. We've got between now and the expiry for July, we're looking at about 26-27% coming off, so just be aware of that. On a $6 trillion asset, that's 1.5 trillion to 2 trillion. That's going to be changing hands in the next week and a half. Looking here at the SPX structure, very broad, ill-defined, a lot of transitions sitting in here. The structure is not supportive to moving up. We've got a tight grouping that you see here. We're here at 38.31. You can see some other gamma levels sticking out down here, which we think are very interesting. The short calls are rearing their head. We got this double, negative here with COI and POI at 4,000, and then we've got this 4,005 strike, which is the JPM short call for September expiry. So this is already starting to show its influence, and it's growing in magnitude day over day. So what does that mean in the big picture? So we do have the market model showing a long signal end of day, on 7.5 yesterday, and it's confirmed across all the cumulative ticks. That's good. Mixed picture on the wing chart, poor structure. The zeros are dropping, which is bearish. Weak overall structure in the 0 DTE and overall in the SPX. We're just not set up well to rally here, even though the market model is starting to signal the potential to go long here. Inverted, we have an initial long signal with the shortest MA triggering a positive slope. We showed that Friday's bounce is continuing through yesterday, although the open yesterday was not strong. We recovered midday and tore off to the races in the afternoon, but again, the overall structure of the market's weak. The wing charts are mixed. They're not confirming this move. The VIX is indicating an increase in short-term downside, which people want to participate, so a relaxing of the VIX. But the OI charts are showing calls going in for August and beyond, all the way into fourth quarter. 0 DTEs, not excited about them. They're mixed, they're weak. Just pay attention to the Qs. You might have some short-term opportunities in the Qs or in its constituent technology stocks. So that's it for today. If you like today's content, please come join us at gammaedge.us. That'll take you to a sign-up page. That sign-up page will get you into our Discord. 14-day free trial, all the tools turned on. A lot of great traders, a lot of good dialogue going on, especially right now. Follow us on Twitter, please, with Gamma Edges with an S, and then here on YouTube, if you like today's content, smash that like button and follow us so you get notified the next time that we add content. So with that, I bid you farewell. Hope to see you in the Discord, and good luck to everyone.